Greetings, members, one and all of the Salivation Nation. 3 major reasons why gold is preparing for a big rally in 2020, a supercharged rally, and it's understandable why some may think this may be the case. Let's explore. Yes, this comes to us from ccn.com and was shared with me by Chuck and Plata. But before I get into this, you got to understand that, there's a name that's going to be quoted here, Peter Schiff. But you also just have to think about, no matter what source is, there's a psychology behind these prices for gold and silver, not only in terms of running to it as a safe haven in times of economic instability, but maybe even doing so sort of short-sighted and kind of running to it too fast, so to speak, in times like this. But also, it's very easy when there are indicators and a track record, especially over the last couple of months here, when we've seen gold kind of creep up and even in some cases spike up to a point. It's getting now to the levels where it was, 6-7 years ago, when most people thought it was a good deal to find gold at this price because they thought there's no way after the 2011 run-up of gold and silver that it could go much lower. We saw a dip and then realized, oh man, this is an opportunity to buy because it's going to climb right back up again. So I caution viewers when I make videos like this, and it is fun to talk about, but it's also something to kind of keep in mind and keep our focus, to have a balanced viewpoint and realize that markets make moves for one reason or another. And just because we've seen this explosive rally over the last few days, and especially with what's going on with the geopolitical tensions with Iran right now, those can ease. And, just as people are fearing there could be, increased tensions or even a hot war, it could go the other way as well. And notwithstanding, even if it does go into something more heated up, people will eventually come used to the idea, traders, those people in the markets, the new reality will set in, and then the appeal of gold, the allure, could fade away. So in other words, there's people that prospect that there's going to be movement in the price in one direction because they have the recent history of price movement upwards. So it's very easy to make those predictions. But be cautious because it could go the other way. It doesn't take away from what gold and silver do. But we'll explore these, and we'll continue to explore these articles and kind of give an idea to get an outlook, because it is fascinating to see where the psychology is as well as some of the analysis behind some of it can be. So let's explore and pick apart these 3 major reasons why this rally could happen here. The gold has risen to the yearly high of 2019, testing a key resistance level for the first time in 4 months due to intensifying geopolitical risk, declining housing market sales, and the retest of key levels. Investors anticipate a strong year ahead for the safe haven asset. Since December the 23rd, the price of gold has increased by over 5%, from $1,477 to a historically important level of $1,550 within a 2-week period. For an asset like gold that tends to see a low level of volatility throughout extended periods, such as a steep recovery, is unprecedented. Let's pause and take a look at these prices right now for gold and silver, and we can see that gold and silver are reacting here to the markets, and they're up a little bit here. Gold is at $1,572.10. That's a 0.37% increase, $5.80. Silver is up 23 cents to almost $18.50 now. So there's quite an upwards movement. In fact, of all the metals except for rhodium, which rhodium is in by itself, up $1,000. Insane in the membrane where rhodium is going, but that's a whole nother story. But as far as the other precious metals, silver is the clear winner of the day, at least so far here. But let's get back into gold, because gold really, it's less volatile for the most part. Although recently it has been volatile to the upward trajectory. But essentially it is the ultimate safe haven. I don't think anybody can argue with that. And it packs a lot more value in a smaller size, which is kind of one of the reasons why I have been conservatively putting more money into gold as of late in the last couple of years. That's been my move, and I hope to do that again this year as well. However, I'm going to probably try to get a little more silver too, as a stack, but not a whole lot more. We'll see how that plays out. I don't want to hold myself down to any particular strategy or whatever, because things can change, and the prices have changed, making things a little bit more difficult to acquire precious metals these days. So the geopolitical risks, spiking demand for gold. According to Peter Schiff, a prominent gold investor and CEO of Euro Pacific Capital, geopolitical risk remained the biggest factor for gold's abrupt rise over the past week, for sure, especially following the assassination of Iranian General Qasem Soleimani by the U.S. Oil price spiked as financial markets trembled, triggering the gold price to increase. He said heightened geopolitical risk has resulted in both gold and Bitcoin moving higher, but for different reasons. Gold is being bought by investors as a safe haven. Bitcoin is being bought by speculators betting that investors will buy it as a safe haven. It's actually a good point. That's true. I mean, Bitcoin is still very speculative in and of itself, but in due course, as it proves itself, as it matures, who knows where it will be, and if it could, will it surpass the MySpace phase? I think that's the thing now. Right now, Bitcoin is where MySpace was when it was at its height or near it. But will Facebook come along and take out MySpace? Like, will some other coin come around and do that? Or will the government get involved and regulate it all and totally rewrite the rules for cryptocurrencies? Prior to it, investors were uncertain whether there was a strong catalyst to push gold above $1,550, which the market rejected in September 2019. The gold market struggled to recover since. Now, the other thing, too, with geopolitics is trade, even though that is also domestic as well, and also Brexit. Those two factors. On the 14th, the trade deal, or the 15th, the trade deal will be signed, supposedly. We'll find out and see. And that could quell the markets a bit. We'll see here. Factor number 2, underperforming U.S. real estate market. This is a sensitive topic because it's the housing market that kind of led to the recession of 2007, 2008. To a broader base of investors, gold and real estate are considered to be two major real assets or physical assets. Hence, when either one of the two underperforms, the other tends to see an increase in value. Possibly because of record high stock market and the rise of the inflow of money into the stocks, the U.S. real estate market has not met the expectations of analysts in the final month of 2019. As buyers continue to be put off by expensive supplies in the market, the U.S. real estate market is set for a weak year in 2020. How weak is anybody's guess? It depends on jobs and other factors, I think, that'll come into play. But this is a sensitive area because that's kind of what the catalyst for the last recession was. So they're watching it closely. An underperforming housing market can serve as a medium-term catalyst for gold, specifically if it sustains its momentum amidst heightened geopolitical risk. Also covered in a previous video that the manufacturing sector performed less than it has since 2009. That's a little bit scary too. But there's other factors of the economy that are doing very, very well, and those numbers could be revised upwards. We'll see, especially after the China Phase 1 trade deal is signed. The third factor is the surprising retest of $1,550. That alone, it's a technical aspect of it here, but the psychology does react even to technical analysis as well too. Although analysts anticipated the price of gold to react with a firm rally following the crisis in the Middle East, the magnitude of its upside movement has surprised investors. Yeah, it surprised me too. Look at that. Huge jump there. The gold price surpassed the 1550 for the first time since September of 2019. The 1550 level has served as a particularly heavy resistance level since 2013, and a clean break above it would position gold for a new rally in the first half of 2020. In other words, no ceiling, no psychological limits to that. To put it into perspective, if the gold price cleanly surpasses 1550 and it becomes a support level, the next resistant levels are found at $1,800 and $1,900. Now that is interesting. I don't know where they get that or how they come to that conclusion, other than that's where the record was. But what about 1,600? To me, that's got to be a pretty strong resistance level. I mean, it's well above that 1550 level here, but you're completely forgetting about 1,600 and 1,625 or 1,650. Unless there's something I'm missing in the technical analysis. Gold, depending on how the price reacts over the next several weeks, could be en route to testing 2011 levels as long as it's not met with a sleepy sell-off in January. To me, that's a far stretch, and I think that's where some of these analysts get carried away in their predictions, because they're immediately going from the 1550 level from that 2019, and even to the past, we talked about 2013, 2014 when it was at that level too, to automatically just going straight back up to its all-time highs, or the 2011 levels where it was literally up that high for just a very short amount of time. This is where I caution viewers in these types of things. That's why I try to kind of approach them from the sort of a more realistic approach, or to kind of ease and a more moderated approach to this stuff, and not get too excited about it, because you can read that sentence and say, oh wow, it's going to go up there, that's where the resistance is going to be, it's just going to smooth sailing all the way up. I don't think so, but nonetheless, it is kind of exciting in one way, but also it could be just a quick high jump, and these numbers could pull right back on down, depending on what Iran does. If Iran doesn't do anything the next couple of days here, or even weeks, these numbers could push back down. Or if there's an attack and it's much less than what we'd expect, then these numbers could pull back as well. Very interesting, definitely indeed, to see where things are going with the precious metals. Especially gold has really shined here as of late. Fascinating indeed. Post your thoughts below. I would like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.